Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Markets were relatively whipsawed overnight after a surprisingly strong report from the US on retail sales, which offers hope that the most important part of the US economy, consumer spending, can stay afloat despite worries about a possible recession looming. The Australian dollar, having thought twice about taking the contest towards that key level that was seen at 69.95, we can see yet another failure for the bullish challenge and now looks back towards the bottom side of this range, seen somewhere around 68 figure 30. Along with that is the 60-day moving average. In light of the pattern, we are negative to the start of the session, but we may see some profit taking as the market will probably be a little bit cautious in terms of trading towards this bottom side of the range. However, a break would give further indication to the bearish case and open up towards the 66-cent region. But a key level from 68, so we may see a possible rebound or even a bullish ambush that would take the market back towards 69.45, and with that cap still seen at 69.95. The market was relatively weak for the euro as the dollar index, which measures the greenback strength against a basket of six major currencies, edges higher around 103.30-35. In light of the pattern, the euro is still very much on track, I believe, from the technical breakdown that we're looking towards 106.20. To be on your guard though, there is a little bit of divergence coming here, so towards this region could see a rejection or a rebound from 106.20 and maybe even take us back towards the recent highs of 107.80-90. The bulls cheered overnight as the market crushed the level of 132.80-90. From the break has now opened the way towards 134, which has been reached, to 136. Towards there may see some profit taking, so as we see these gains continue, do be on your guard in case we see traders jump in and take some profit from their recent longs or the positions that they purchased underneath 132.80-90 and take, as I say, profit towards this top side anywhere towards 136. Sterling weaker overnight, having rejected that 121 level, and along with that also the 122.20. The market is now turned back towards the support level of 119.45. A key point, as long as we hold there, then I expect to see a recovery. Failing this, then I'm looking down towards the next target around 118.80 to 118.30. We are somewhat bearish due to the last two candles, so therefore a lot of pressure will be on 119.45. So do be on your guard in case you decide the market may not hold there, and therefore could see weaker play into today's session. The call since the break of 1,860 has been down to 1,820.26. We got very close to there after trading close to around 1,831, I believe. The market is still destined to take the challenge lower due to the ADX trend into a bear case and also the RSI still remaining negative but slightly oversold. We may see some profit taking from 1,820 to 26 due to the fact is it is relatively a firm drop, and the market no doubt will be trimming some of those short positions back. Slightly whipsaw price action for oil, but didn't take out the level of $76.90. After the second challenge, the market bounced, but we're not out of the zone of seeing a re-challenge due to the technicals remaining somewhat lackluster, but a little bit weak in terms of how this MACD is forming. A break of 76.90 would open way towards 75.60-80, where I believe the bulls will jump in and take the market back, maybe beyond 78 and up towards 82. But this pullback looks very much intact to continue, and therefore let's see how the two levels work out, being 76.90 and 75.60-80. Well, that wraps it for the morning. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.